this crazy life we live, we all need someone to hold.
Thank you very much and welcome to this class offered by Real-Time Business Trainers. We empower professionals with real-time expertise. You can book your online classes with us via our email realtimebusinesstrainers@gmail.com. Today we want to do a question. It is a CPA question. In fact, it was a question examined on December 2021. Question 3B. The paper is financial management in CPA. So the question reads, Symphony Limited borrows Kenya shillings 15 million from Baraka Bank at an annual interest rate of 16% repayable in 4 equal annual installments at the end of each year. Required. Prepare a loan amortization schedule for the company. When you come across such a question, you just read it. First of all, Symphony Limited borrowed. This is the amount that he borrowed. Or rather, this is the present value. That this is the amount he borrowed from this bank at an annual interest rate. Another thing to note, it is the interest rate, sometimes written as R and sometimes as K, depending in the formula. Repayable in 4. Another thing to note, it is the number of payment or the periods. That is the 4 equal annual installment at the end of each year. End of each year means this is an ordinary annuity. The ordinary annuity is paid at the end of every period. We have another annuity called the annuity due. It is repaid in the beginning of every period. Now we are required to prepare a loan amortization schedule for the company. To prepare a loan amortization is how this amount is shared, or how is this repayment, maybe how they are shared amongst the 4 periods. That is, this amount is the amount to be paid in the first period, the second, the third, and the fourth. So in this case, we first of all should work out to know the annual repayment, because we have to pay after 4 years. How much should we pay in the first year, second year, third year, and the fourth year? And the what we call the annual payment, or rather the periodic payment, that is the payment that should be done. They are called the periodic payment. They go by the formula. I hope you can see very well my screen. Periodic, PMT. The periodic payment will go by the present value of an annuity. You divide by the present value interest factor of an annuity, that is ordinary annuity, in a given rate. Let me use R or K. Let me use K in a given period. That is now the formula. As I said, when you are given the formula, you break it down. What do you have? What don't you have? In our case, we have the present value. We have present value of an annuity. We have it being 15 million. But we also can have the present value interest factor of an annuity in a given percentage in a given period. And that is, the formula goes by 1 minus 1, you open bracket, 1 plus K or R power negative N, that is number of periods, over K, or rather over R. In our case, we substitute 1 minus 1 plus, our K is 16%. 16%, let's calculate with you. 16 divided by 100 is 0.16. I hope you can see. 0 0.16 power negative. It is 4 equal annual installment, power negative 4. So we continue, but this is all over 0.16, that is the percentage. So we continue by saying 1 minus, when you work out this, it will give you 1.16 power negative 4 all over 0.16. That is 1 minus, when you power that 0.16, you want 1 here, this is the one you want, then you power negative 4, you get 0.5523. Then that answer over 0.16. I hope you are together up to this point. From there, we continue. Now that we have gotten we have not got the present. So the present value interest factor of an annuity, that given percentage in that given period, we have 1 minus that answer. This is the answer. So 1 minus it. You have 0.447. It is 0.4477 divided by 0.16. Let's calculate with you. Divide by 0.16. We get answers 2.7982. 2.7982. So this is the present value interest factor of an annuity, but our concern was to get the periodic payment, PMT. That is the present value interest factor of an annuity, that is 15 million, divided by over 2.7982. When you get that amount, 15 divided by 2.7982, you get 5,360,588.95. I hope if you calculate very well, that is the answer. So when we mean the periodic payment, this means this is the amount that Symphony Limited have to pay after every year in those 4 years. So I have my table here. These are simple table that you have to draw, starting from the head of year 1, 2, 3, 4, loan repayment, beginning of year principal, interest principal, and the end of period principal. So I'll just draw and draw a line here to show percentage. So where there is the interest, remember we have 16%. Now it is the end of year 1. I should list year 1, 2, 3, 4. So I will subdivide this. I will subdivide this table of mine into 4 periods. That is 1, 2, 3, and 4. So you have the end of year 1, 2, 3, and 4. So when we talk of the loan repayment, I've said this is the amount. This 16 what? This 5,360,588. This amount is like the installment, so it will cut across. The installment here is 5,360,588.95. 5,360,588.95. 5,360,588.95. 588.95, 5,360, 588.95. I hope you can see. So we start now the beginning of year principal. In this year we have a principal. It was the principal of this year is the whole amount, 15 million. So we have heard that the bank was the bank had the interest rate of 16. So you'll take 16% of the principal. As you can see, 16 divided by 100 times the 15 million. So we get the first interest being 2,400,000. This is the cost. It is called the cost of borrowing. So this amount should attract an interest of 2,400,000. In first year, 400,000. So after this symphony company paying in the first year it paid 5,360,588.95. In this amount, out of these 2,400,000 days the interest. So which portion will represent the principal? So you substitute, you subtract 2,400,000 from 5,360,588.95. Let's do it with you. So 5,360,588.95 minus the answer that was 2,400,000. So you get 2,960,588.95. So in year one, this was the amount that he paid this and this, a total of 5,365,588.95. But the portion that represented the principal is 2,960,588.95. So the end of year, the principal of the end of year principal will be the beginning of year principal minus this principal, the portion that have been paid as the principal. That is 15 million. You minus that, the answer that we saw. So we get 12,039,411.05. So by the end of year one, this is the amount that was remaining as the loan or as the principal. What can you observe from this? In year one, the amount that was charged as principal is this amount, 2,400,000. This is what we call the cost of borrowing. That is in year one. Now we go in year two. What is changing in year two? What is changing in year two is that the principal in year two is the end of period principal in year one becomes the principal in year two. That is 12,039,411.05. Again, you subject this one to 16% because it should be subjected to the interest. That is times 0.16. You get 19. That is 1,926,005. That is 1 million. 1 million that should be paid. 1,926,305.7. Without it to 2.77. So this is the amount that will be the interest of the second year. What about now the principal? We have said again, to get the principal, you subtract the repayment, the loan repayment, you subtract the interest. So you will come and subtract 5360, that is 5,360, 588.95 minus that answer, that was the interest. You'll get 3,434,283.18. Use the 2 decimal place, 18. So in here too, this is the amount that will be paid as interest, and this will be amount that will be paid as principal. Again, now to get the end of year principal, we subtract the original year 2 principal, that is 12 million. We subtract the principal changed from the beginning of year principal, from this one. We subtract this from this, that is 12,039,411.05 minus that answer we got. So you'll get 8605, 127, then 87, as you can see. So the end of year 2 principal will be 8,605,127.87. Remember, we are amortizing, we are distributing this loan, how it should be paid. And this is a real life situation. It happens when you go to take a loan from the bank, where that the bank is charging at a given percent. This is what they practically do. And now I say the end of period principal in year 2 becomes the opening principal in year 3. That is, year 3, the principal will be 8,605,127.87. Again, this principal, you subject it to 16%, 0.16. You get 1,376,820.46. Now this is the interest in year 3. And remember, this amount should be distributed until this amount, by the time we reach it should be 0. So let's see. This is the year 3 interest, and again I said, because he paid the repayment remains, the installment remains 5,360,588.95. This is the installment that he pays. So you subtract this interest from this repayment, the installment. You subtract interest from the installment so that you can get in that portion which portion represented the principal. You subtract. You get, it is that 983, that is 3 million 8, that 3 million 9, this is 9. Get, this is 3 million 983,768.49. So in year 3, this is the amount he paid representing the principal and the interest. But remember, he paid this. When you add this and this, it should give you the installment or the loan repayment. Again, when you want to see the end of year 5, the end of year 4, the 3, we subtract now this principal. We subtract it from the beginning of year principal. You subtract this portion that have been presented by the principal so that we can get the end of period principal. I mean 8,605,127.87. You subtract this one, you get 4,621,000 359.38. So as you can see, this is the end of year 3 principle. And this end of year 3 principle, again, it should be the beginning of year 4 principle. I hope now you can get. That is 4,621,000. Yes, as I've said, the end of year 3 principle becomes the beginning of year 4 principle. That is 4,621,359.38. So this amount, you calculate the 16% of this principle and you get 739,417.50. So the final thing to do here is to subtract, and you can see it is 4 million, as I've said now, 4 million. So to get this principle here, I said it's the installment, the repayment that was done on year 4. That is 5,360,588.95. You subtract the interest. Now you get this principal being 4,621,171.45. Now that this naturally, this principal here should be equal to this principle here, because when you subtract the beginning of year 4 principle, when you subtract the principle in year 4 from the beginning of year 4 principle, it should be 0 here. Let's calculate 4,621,359.38 minus this value here, 4,621.45. You can see here, I repeat, 4,621,359.38 minus 4,621,171.45. It should give you 0. So the difference you see here, it is the difference brought by the calculations. That is the point and whatever. That's why you see we have 187.93, which is okay. But ideally it should be 0, simply because we have exhausted the payments. That is what you call the loan repayment schedule. This is, or rather, the loan amortization schedule. I think you can go through it. Let me zoom it for you so that you can see our solution from where we started to where we are. This is the full solution. You can do it for your own, then you can compare and see where you are going wrong. So it should be done like this. So I want to invite you to these classes. Kindly, when you come across this video, don't hesitate to subscribe, comment, and share, so that this knowledge maybe can help someone else sitting somewhere. And if at all you feel like you can't or you are so busy that you can't attend your physical classes, you can book online classes with us at Real Time Business Trainers. We empower professionals with real-time expertise. Thank you very much.